Hey, what's going on? Today's Friday, January 19th, 2024. And let's look at the market real quick. It is on fire and it is on the cusp of breaking out here, which seems crazy to me. And this is why indicators potentially, if this breaks out, this is why indicators can't be trusted, right? I've tried it, it doesn't work. This is overbought, not anymore, but you would try to short this here, right? Or even way back here. And then look at this, it's about to bust out and go higher. And the same with the MACD, it's curling down, yada, yada, yada. That's why technical analysis doesn't work. I guess it provides an overall snapshot of stuff, but yeah, beyond that, we are right here on the cusp of busting out here. Let's see, SPX. Yeah, we are super close, all-time high. What is that? 9 points away from all-time high. I'd say there's a good chance we hit that today. We're due for a pullback, but man, I don't know. This market just keeps going. So with that being said, come back here to my account and I'll go over everything real quick. This is from the previous contract of MES. I don't know why that was hard for me to say. It's free hedge, not doing anything there. This is the current contract on MES, and this is a free hedge. Or no, this is the hedge I put on just yesterday. And I already have about 15%. I'm super tempted to close this and roll it up. Because my experience, it usually takes about 2 weeks to get like 50% of max profit, and this has 15% in one day. So this is definitely faster than normal. I think normally you are shooting for like 3 to 4% in a day, to make that 50%. Well, this is up, 4 times that almost. So I'm super tempted to take this off. It's this one here. It's only gone down 2 deltas to the 8 when it should be at the 10. So let's see if I buy that back and then I short this, go back to the next 10. 550 times 5. It's only $25. You get me? Made 25 bucks in a day. I don't know. Whatever. I'm just going to keep it simple. I'm just going to leave it. And so that's the hedge. It's working great. These have gone down, but again, I'm going to cycle this through and keep rolling these up essentially to the 10 delta. And yeah, rinse and repeat. And eventually these 3 are free. All right, so then this 211 or 1122, whatever you want to call it, 112 bear trap, undefined risk bear trap is going great. It's working. This is at 37%. Wait for this to get more like 50 to 70%, and then I'll take that off, and then I will have another free hedge right here. And to the SPY, free hedge, not doing anything there. The stupid iron condor. It down 161, but then I've gained 21 on just this new position here. Oops. I sold this that was 9 days ago. Anyways, sold that 9 days ago. I'm up 21 bucks. And this just the call side just keeps losing me money. This is why iron condors are stupid. They're just stupid. When you go against you, there's like nothing you can do. So yeah, I probably should have rolled this up earlier, but I wouldn't have covered this. That might be $50 instead of 160. or that would still be 160, but that might be like $50 or $70. So, I'd get back some of it, but it's just stupid. Anyways, 28 days remaining. I have one more week. I'm closing that out, never looking back. Free hedge, it's a free hedge, so not doing anything there. And then XSP, the 1122, I mean, that's only 3 days old. This is working fine. I mean, similar to the other ones up here, this has kind of made a quick 18% in just 3 days. So that's good, but I need to let this decay more and take this off at, 70% or whatever. So, all right. So I need to get some theta. After opening that hedge yesterday, I'm only using 3% of my account, and which is crazy. I essentially have, oh man, if we go back, what am I looking at? This one? No, yes. M4, it's so stupid. Why don't they just put like March, December, whatever. Anyways, come here. So right now, this is like my main strategy, and everything checked. I can only make, since I put that hedge on, if this market just stays higher, this doesn't factor in rolling up the short puts, blah, blah, blah. Right now, 21 bucks to the upside. So I need to get more theta for sure. So I'm just going to open up the next 112 bear trap. So go to 119, and this is the hedge I put on yesterday. So 112, come here like 25-ish, and you buy the 50-point wide spread, and then you come down here to like the 805. So if I'm doing 2, yeah, sure, let's try this. 2, that gets me $22 credit, which is 110. So now that bumped the upside to 110 profit, and that's greater than 99.5% on that one position it claims. Let's uncheck these. So yeah, that's crazy. Buying power, that's not right because I'm on the wrong account. I don't know why it always defaults to that one. All right, so and that only takes 600 bucks. 110, I think I need to get more theta going. I'm gonna make, let's see. I mean, I guess either way I can edit the order. I'd rather keep this up here. I feel like the hedges are almost too far away to even, oh, come on. I feel like the hedges are almost too far away to even realistically be effective. They're like, my closest hedge is like 10% away. Keep this hedge up here and maybe bump this up 2 spots. I already bumped it 1. All right, so now we're at the 7 delta instead of the 5 delta. And let's see, go check this out now. So now I'm up here at 141 and 391 if it goes down there. I almost want to get like 150. I think that's kind of what I was thinking one time. Get 150, there you go, that's 160. Has a 98% chance, they claim. What if I go here? 99. I guess I'll stick with the 99% chance of profit. So that will give me 142 to the upside, and then in theory that could max out at 392. All right, so I just need to sell this. And I guess I want to try to get as much as I can. Oh, of course. Let's see. So these strikes, doing the 4100 I'll have to buy those or sell those two in a second here. And let's just get this going. Less than ideal, huh? I mean, that's the mid price, so $8.35. And then now I got to sell two of these. Double check the curve. And yep, those are the right ones. So yeah, there we go. All right, try to get another quarter. All right, there we go. 18.25 got it filled at. What's the market doing? Is it still going? Yeah, oh, there we go. Busted through. Officially made a new high. Busting out of this 2%, 3% box here. What did the SPX do? Sorry for the switching. Oh, so close. High of 48.1571. It got $3 away. Anyways. All right, now I need to enter these into the spreadsheet. I guess I'll group them together here. Looks like this is going to be number 3. Group positions. I guess I'm going to stick with the 112-3. Good activity. Pull up spreadsheet. And let me copy and paste a couple rows here. (112-3). Copy paste. And let's see. This is at the 4100. And those are the 4650. 4650, 46. And these are also the May expiration. 119. And I open those on the 19th. 119. 119. Let's see, 1825 I filled those for. So it's a little more aggressive than my first one. First one was 1575 right up here. This is annoying. So that's 18250, debit of 8. Nope, this has no debit yet. Fees, I assume, are going to be the same. So then this has a debit of $8.35. So I paid 41 bucks for that. And let's see, oh yeah, the deltas. Go back here. Oops. The 4100 is a 7 delta. And then this was the 2522. It said there was a 99% chance when we opened. 12.4. Share price at open is, I mean, on this contract, it says $48.95. Still don't quite understand why the different contracts have different prices, but whatever. All right, I think that's it. 112-3. So now we come into our overall curve and check everything. Boom. Here's my overall position. So now if it just stays up here, anywhere above 46.50, and I'm going to make 161 bucks. at expiration, right? If we start to get any sort of bigger correction, I can start to make a lot more. And yeah, that's the whole point of this is, I mean, unless this crashes like today, this isn't going to, what am I saying? Unless this crashes today, if it crashed today, I'd start losing money. But, you know, if you go over here and change, let's see, change the date. Let's say we go to the next month. Go to leap year day. I mean, look at that. It bumped it all the way back here now. And you'd still be making money here. That orange line is the theoretical price, right? So you'd make money all the way down to 4,300, give or take. So what is that? 43 to 48, that's 500 points. So 500 divided by 4,800. Oops. No, that's actually, it's a 4,900. That's 600. Sorry. 600 point drop from 4,900. It'd be a 12.2% drop. It's not out of the question, but that doesn't even factor in the higher IV. So let's go, say IV goes up 10%, another 10% on this one, whoops. So I guess that changes it. I'd start to lose money more like here-ish. So that's only like a 5% correction, but I don't know. For some reason, that doesn't quite make sense in my head, but we'll see. I mean, this is the whole point of these things, right? Is that in theory, when the market starts to crash, this big hedge will kick in. So we're building up this hedge, and yeah, in theory, it's going to work out. So, all right, that's it. Thanks.